Now, those sanctions against Russia are some of the toughest penalties so far, aiming to cripple its connectivity to the global financial system. The sanctions include targeting the country's high-tech companies and aircraft makers. The EU has also expelled some Russian banks from the global interbank payments network, SWIFT. Still, the most serious penalty would be the freezing of Russia's central bank reserves valued at $630 billion. The sanctions could harm Russia's ability to shore up its economy and shield it from costs associated with attacks on Ukraine. However, Russia says it remains confident the country will be able to ride out Western sanctions. President Vladimir Putin will be meeting officials to discuss the economic impact. For more on sanctions on Russia, Professor Pushan Dutt from INSEAD joins us now. Professor, the measures take aim at Russia's central bank. Now, how substantially would these cut Moscow's access to the international financial system?
So there are three sets of new sanctions. So one is about the SWIFT system and sanctions on banks. The second is cutting off the central bank's access to foreign currency reserves, and also there's a task force in the making. So we already see that there has been a big impact. As you mentioned, the currency has tanked quite a bit. They are in the midst of currency crisis. Now, there are also medium to long-term impacts, because if the Russian banks get cut off from SWIFT, it means that Russian companies suddenly get cut off from trade finance. And once you get cut off from trade finance, your trade over time takes a hit. Now, the pain can get, of course, more extreme. If a Russian bank gets booted off SWIFT, then, there will be a rush to the exits, and this will lead to bank runs. And bank runs are actually being warned by the European Central Bank. Bank runs means a huge hit to the Russian economy. Now, this brings us to the second one, which I think is the biggest one, which is the freeze of the central bank assets. Now, when currencies start to collapse, central banks step in, and this would buy rubles in this case and sell dollars and euros. But these have essentially been frozen. Now, gold, they have access to gold, but that requires physical shipment, and they've been cut off, by the Europeans from accessing their airspace. Now, the central bank runs out of reserves. I think it's game over. The economy will go into a tailspin. Now, it's not clear if they'll really run out of reserves, because they're still picking up about $500 million a day just from the sales of oil, and there is a huge carve-out that has been allowed for the energy sector.
Mm-hmm. In terms of how much these sanctions will also affect foreign investors and those relying on Russian commodities and invested in Russian companies, what will happen to them?
So I'm quite sanguine about that. So there's nothing I think that they cannot handle. We have to keep in mind that the US has a huge advantage, which is that the dollar is the reserve currency, which means the US Federal Reserve and also the European Central Bank can actually arrest any sort of contagion and absorb the stress on financial markets. So basically what the ECB and the US Fed have to do is they can actually again turn on the quantitative easing taps. They also have the ability to start reducing interest rates. In fact, I think they don't even have to do that. To calm financial markets, all they have to do is to announce that they have this option and they're willing to exercise it. Now, sure, some banks and other companies that have invested in Russia, they will find that they cannot take their money out of the country, so the asset side of the balance sheet will take a hit. Some hedge funds might also take a big beating because they've invested in long-term Russian debt. But post-global financial crisis, the financial sector has been shored up. So I think it's a lot more robust. So I don't see anything like what happened in 1998 when a hedge fund called Long-Term Capital Management actually collapsed, and the Federal Reserve had to step in and organize bailouts. The Americans also have other options, which is not in the financial sense, but they can also convince the Saudis and the Emiratis to actually start pumping out oil to sort of stabilize inflationary pressures.
All right. Thank you, Professor Pushan Dutt from INSEAD.